Hi, welcome to this week's video blog at MonsterMortgage.ca. My name is Christian Harris. I'm here with Ted Tsiakopoulos from CMHC, Chief Economist. Is that
Regional Economist?
Regional Economist. Sorry, okay, that's the official title. So we're very lucky to have him in speaking to our group today, and we want to sort of ask a couple questions that are important to a lot of our clients. Big one, Ted, is the condo market, Toronto specifically condo market. What's your thoughts, your outlook on that moving forward? I mean, you hear a lot about it in the news, but what are your thoughts?
Well, we think as affordability continues to erode, we think consumers increasingly will shift to condominium housing, and that means that we're going to continue to see price growth. Maybe not as strong as what we've seen historically, but we do expect prices to grow. The other factor of supporting condos is that we are seeing rental demand growing as well. And we do know that investors are buying condos to lease those units out. And so for the rental market per se, it's good news for investors as well, because we do see rental demand picking up as well.
So, especially in the downtown core, I guess, right?
Particularly in the downtown core, people want to be closer to the transit, closer to the entertainment district, closer to the the theater. So yeah,
it's surprising. You hear a lot of negative or worry talk about the condo market in Toronto just because of how many cranes and towers are going up. But yeah, it's very interesting. It makes a lot of sense. What about the overall housing in the GTA or even Ontario? I mean, we keep hearing about this bubble or this 25% overinflated. What's your thoughts on the overall?
Well, I think that all of the fundamentals are pointing to continued growth in the housing sales and prices. As I said, I don't think we're going to see the kind of growth we've seen historically. We are a bit more bullish on communities surrounding the Greater Toronto Area. Those peripheral communities around the GTA are more affordable. So I think that Toronto will continue to post growth, but we're going to see more in the sort of higher density segment of the housing market, because it is the more affordable segment.
So it sounds like CMHC is I guess quite bullish on the housing market in Ontario and in the central core for sure. Is that safe to say that the overall Canadian economy is not just the housing part, but the overall Canadian economy is looking good? I mean, we have oil prices in the West, obviously an issue, but overall.
Well, I think we're seeing some momentum shifting eastward to Ontario, largely because we benefit from lower energy prices. Not the same story in the prairies. So lower energy prices for Ontario do one of three things. They allow consumers to save more money. Lower gas prices means less money at the pump, more money to spend on other goods. That creates jobs, that supports housing. The other factor is that low energy prices tends to push the Canadian dollar lower, and of course that makes us more competitive. It helps trade, it helps exports, it helps sort of the southwestern Ontario region far more so than perhaps northern Ontario. I think low energy prices on the whole is a good news story for the economy here in Ontario, and it's a good news story for housing. Yeah.
Interesting. Ted, thank you very much. We appreciate you coming in and sharing some of your insight with our clients, and thank you very much.
Thank you.